This is the last lesson on supply and demand before we move on to price cycle, I think it was. Yep. But let's get straight into it. So, lesson 2. How to correctly locate and draw your supply and demand zones and understanding discount and premium pricing. So, how and where do I draw my zone? This is what a lot of you will be asking me. So, once we have identified our base, you may ask, what do we specifically mark out within the base? Do we mark out the entire base? And the answer is simply no. I often like to draw my zones of an indecision candle. An indecision candle is a candle where both buyers and sellers come into power, which leaves a candle with mainly wicks on either side and a small body. Usually the body would be in the center of this candle, and it looks something like this. So notice we have a rally, a base, and a rally, right? Now this is our entire base, right? But what within the base do we mark out? We look for the indecision candle. Now look, these are 5 indecision candles, right? So we look for the one with where the body's in the center and has wicks on either side. As you can see, you can identify that right over here. We have wicks on either side and the body's in the center. That would be our indecision candle. Now, look at it play out. So we marked out this. This is our entire base, right? Now, if you took entry of the base, you'd have your entry there and your stop loss there. You would have had a very big stop loss. But as you can see, we identified our entry from this indecision candle. Now, you would have had your entry here, and you could have had your stop loss there, or if you wanted to be safe, you had your stop loss at the bottom of the base. But in terms of entry, you would have entered there at the base, but you would have entered here if you went off the indecision candle. Now look how accurate that would have been. Yeah? So, next question I'll get is, if I identify multiple zones, like this case of it, we have a rally base rally here, but we also have a rally base rally here. So, which zone do I choose? Do I enter there or do I enter there? Now let me teach you guys how to select which zone you would wait for. Understanding equilibrium, discount, and premium pricing is essential when trading supply and demand. When identifying multiple zones, you go with the zone that is within our discounted levels. Now, how do we identify these levels? To identify discounted and premium levels, you must know how to identify the equilibrium. Equilibrium is the midpoint of a price range, or the midpoint of a swing. It is the level at which an asset is neither cheap or expensive. Therefore, this wouldn't be an ideal level we want to execute a trade of. We want to be buying in at a cheaper rate, which is below the equilibrium, and sell at a premium, which is above the equilibrium. Now, an example of understanding this, right? Say this is the low of a price range, and this is the high of a price range. The midpoint would be your equilibrium, right? Is literally 50% of that price range. Anything above that is classified as premium, and anything below that is classified as a discount, right? Now, these levels can easily be identified using our Fibonacci tool. The levels we are interested in are 62%, 70.5%, and 79%, as all of these are below the equilibrium. For long entries, your Fibonacci has to be drawn from the swing low to the swing high, and the opposite way around when looking to go short. The whole point of buying at a discounted level is to allow the trader to execute their trade at the best price. Now, if we go back to this example again. Now, with the knowledge I have just shared with you guys, which demand zone would I look to take an entry of? Hint, look at the Fibonacci levels. So now that I marked out the swing low and the swing high, we have our Fibonacci levels here. Now remember, 50% is our equilibrium. And what did I say about equilibrium? It is the level, here. It is the level at which an asset is neither cheap or expensive. Therefore, this wouldn't be a level we would want to execute a trade of, right? So this demand zone here is at equilibrium. So we don't want to be taking entry here. We want to look for discounted zones, right? Now look at this zone that I had marked out. That aligns perfectly with our 70.5 and 79%. So now out of these two zones, with what I just taught you, which zone would you go with? This one, right? As it's in a discounted level. So when price pulls back, institutions would be buying at a cheaper price to then push price back up. Does that make sense? So as you can see here, price pulls back to a discounted demand zone and then moves over to the upside. Now I'm going to show you guys a quick example on a couple trades. This one, fairly straightforward, right? Look at this. So we have a drop, we have a base, we have a drop, which broke structure, right? That would have been your break of structure right over here. Let's replay price. So one, we have that break of structure. Two, we have all of this imbalance. So we now know price has to pull back to fill in this imbalance, right? And what do we see right over here? A beautiful indecision candle, right? Even cleaner on the 30-minute. So you'd mark out that indecision candle, right? And now we'll wait for price to pull back. Now, you will take out a Fibonacci tool, mark out the high, and we'll mark out the swing low. Now, look at the Fibonacci levels. Does this zone align with the discount? The premium? Yes. It's in our premium level. And remember, we want to sell anything above the equilibrium because it will be at a premium price, right? So now when price starts to pull back, it breaks through the equilibrium. We don't want to be looking to sell yet. We want to sell off a zone that is within our premium range. And we have one that aligns perfectly right here. So we'll wait till price taps into it. There we go. We'll be looking to short from this point here with our stop loss at the wick. And we'll target the low. Or we'll just target this area here. That already marked out. So let's see what happens. And boom. TP hit. Now does it make sense to why I selected this zone? Number one, it broke structure. Number two, we have a clean indecision candle. Number three, this zone aligns perfectly with our discounted Fibonacci level. So this will be classified as a premium supply. So when price pulls back into it, we would look to sell off. Now let me show you guys another example. Euro JPY. This is a trade that hasn't played out fully yet, but we're in the blues. As you can see, only now it's starting to make a move, right? So why did I take entry of this premium supply, right? Now, this is the whole swing point, right? This is the swing high, this is the swing low. Now look at this zone that I have marked out over here, right? Actually, let me go on a clearer chart because it's too much drawing on this one. Sweet. So, number one, price broke this structure. Number two, all of this imbalance, right? So let's actually replay price back to this point here. Okay, so number one, once you get that break of structure, you would fib out the swing high to the swing low. Now you look for your discounted levels, the 62, 71.5 and 79 levels. Now at these discount levels, do you see any zones? We can identify one right over here, correct? So now we'll mark out that zone because it's within the discounted levels. Make sense? Sorry, the premium levels. So this is what we'll classify as a premium supply. So now what would we do? We simply wait for price to pull back into this area of this premium area, which aligns perfectly with this 4-hour supply, and then would look to sell it off. Now as we can see, as price approaches, there we go. We would have sold off here, and this is current price right now. And I'll potentially be looking to target this area of imbalance right over here. So I'll potentially target this whole area here. Entry there with our TP down here. Now does that make sense? Look at our base, right? Very clean indecision candle. Bodies is right in the center with wicks on either side. That's the confluence number 1. Confluence number 2, we have a drop base drop. Confluence number 3, broke structure. Confluence number 4, it's in our premium fib level, right? That's why we took this trade. Another example, or leave this one out. I'll show you a lot better examples. AN, again, I already showed you guys this example, but let me show you why I specifically chose these zones. So now we're on the hourly, right? Entry number 1. Let's pull price back at this point here. So number 1, we have that break of structure. Once we got that break of structure, we notice that there is imbalance, right? This imbalance is now about to be filled. Which zone do we take an entry of? This is our swing high. This is our swing low. So now let's find our discounted areas. Actually, let me go on a fresh chart. Oh, to avoid any confusion. Sweet. Where was it? It was right over here. Cool. Let's just mark everything out quickly. That was the equal highs that got taken out. Right. That was that break of structure. Now once we mark out these, we'll start to look for our entry point. Cool. So again, take out Fibonacci, mark out the swing high, mark out the swing low. Right? Wick to wick. Now we have imbalance. We already anticipate that price is going to pull back to fill in this imbalance. Now which zone do we sell off from? The ones that is within the discounted area. So we can see the 70.5 and the 79%. We look, we can identify a very nice indecision candle right over here. So now we'll take out our rectangle tool, mark our indecision candle, and we'll wait for price to pull back to that zone so we can sell off. Entry number 1, complete. Entry number 2, more liquidity down here. Again, that break of structure, right? Liquidity created down below. Price beginning to pull back. We'll mark out this new price range. So this high to that swing low. And what can we identify with this zone? It aligns perfectly with the 70.5 and the 79%. So that would be another premium supply, right? That would be your entry number 2. Wait for price to react of it. There we go. You've got your entry right over here, and price sold off. Again, what happened right over here? No, wrong tool, sorry. And let's replay price back to this point here. So again, price continued to break structure, but what did it do? Left more imbalance, right? Now we've already anticipated that price is going to pull back to fill in this imbalance, but now we would want to look for a zone to then sell off. So to fib out, again, the new price range. That's the high, and that's the swing low. Right? Look for our discounted areas. We can see this nice candle right here. So this would be our new area of supply. Now we'll wait for price to pull back into it. There we go. Another entry to sell off from. Right? Now for this entry that we identified on the 15-minute, once price reacted of that entry, we identified that price created equal lows, right? Double bottom. And it started to pull back. And there was imbalance, right? So we already know that price is going to pull back to fill in any imbalance. So now we look for areas to then sell off from, right? That's the swing high. That is the swing low. This is a 62, 70.5, 79%. The 62%, we can clearly identify this 15-minute indecision candle right over here, right? So now let's mark that out. We've got stop loss right there. And let's wait for price to react of it. There we go, sniper entry. And price continued to sell off, right? I hope that was fairly straightforward. If you want, I can show you another example, e.g. 4 hour. Actually, let me take out a fresh chart because I already got my drawing on this one. What's going on? Euro GBP. Sweet. Head back to that 4 hour. And let me show you guys why I took this entry. Cool. Alright. Number one, we had that break of structure. Number two, we had this liquidity, right? So let's replay price back to this point. So once we identify this break of structure and this liquidity that needs to be taken out, and this imbalance that has to be filled, we know that price is going to pull back and then sell off, right? But where are we going to take an entry from? Step number one, take out your Fibonacci. Mark out the swing high all the way down to the swing low. And then we begin to look for our discounted areas. 62%, we don't see anything. No base. 70.5%, no base, just imbalance. 79%, what can we see? A discounted supply. So we're interested in this area here, right? So let's go over our confluences again. Number one, break of structure, minor break of structure. Number two, liquidity needs to be taken out. Number three, imbalance that price has to pull back to fill in. Number four, this premium supply, unmitigated, within our premium level. All of these confluences have been built up. Now we wait for price to pull back to that area of supply, and then would look to sell it off. Now, entry would have been off the wick, just like so, and price would have sold off, as it did, right? And let's go for one more example. CAD CHF, do we have anything for that? No, I didn't take a trade yet, but I'm looking at this setup. Why am I looking at this setup? Simple. We have imbalance. We got that break of structure, right? And if we fib it up from the low to the high, what can we identify? A discounted demand, right? And if I head over to that 30-minute, I'm sure I can show you a lot the zone I'm going off with, which is right here. Rally, base, clean indecision candle, and then a rally, right? And we've got this imbalance and that break of structure. That is why I'm looking to take entry of this discounted demand, right? Pound CAD. I already showed you lot this example. NZDJPY. USDJPY. Wide premiums, perfect. This is an example of a premium supply. Sweet. So we got a rally, a base, and a drop. That drop didn't break structure, but what did it do? Leave us some liquidity. So when price started to pull back and fill in this imbalance, I identified a zone right over here. Okay, now if I fib up the swing high to that swing low, what can we see? This base here aligns perfectly between our discounted levels, and as you can see, price pulled back to this zone and then sold off. Yeah, so now you lot understand how we locate our zones and which zones to select. Simply go off the zone that is in the premium or the discounted level, preferably the ones that align with the 70.5 and the 79%. So again, you guys have any further questions, feel free to drop me a message and I'll help you guys out. Alright, take care.